The finance and wealth management industry has experienced a profound transformation in recent years, thanks to the emergence of artificial intelligence, or AI as it's known. Traditional methods of financial analysis and portfolio management are being revolutionized by AI technologies, enabling more efficient and data-driven decision-making processes. In this video, we will explore the impact of AI on the finance and wealth management industry, including its traditional usage, new trends, benefits, drawbacks, and associated risks. Want some free shares? Watch until the end for a referral link. Traditionally, financial analysis and portfolio management relied heavily on human expertise. Financial analysts would analyze data, assess risks, and make investment decisions based on their knowledge and experience. However, these traditional approaches had limitations. The sheer volume of data available, combined with the need for speed and accuracy, posed significant challenges. With the advent of AI, the finance industry witnessed a paradigm shift. AI-powered technologies brought automation and advanced data analysis capabilities, revolutionizing financial analysis and portfolio management. Machine learning algorithms and predictive models could analyze vast amounts of data, identify patterns, and make informed decisions. Wealth management also underwent a transformation with the integration of AI. Traditional wealth management often followed a one-size-fits-all approach, with limited personalization and outdated investment strategies. AI-powered wealth management platforms have disrupted this model, offering personalized financial advice and tailored investment strategies based on individual client needs and goals. AI-driven wealth management platforms leverage machine learning algorithms to analyze data about clients' financial history, lifestyle, and investment preferences. This analysis allows advisors to create customized portfolios that align with clients' specific financial goals and risk appetite. The result is a more personalized and efficient wealth management experience. The adoption of AI in finance and wealth management brings a multitude of benefits. Enhanced efficiency and speed. AI technologies enable faster data analysis and decision-making processes. Tasks that previously took hours or days can now be accomplished within minutes, allowing investment managers to act swiftly in response to market changes. Improved data analysis and decision-making. AI algorithms can analyze vast amounts of data from various sources, identify patterns, and uncover valuable insights that human analysts might overlook. This enables investment managers to make more informed decisions based on accurate and comprehensive information. Risk management and fraud detection. AI-powered tools excel in detecting anomalies and identifying potential risks. These tools can analyze data in real time, identify fraudulent activities, and provide early warnings of potential market risks. Cost and accessibility. AI technologies can reduce operational costs by automating repetitive tasks, minimizing the need for human intervention. This cost reduction can make financial services more accessible to a wider range of individuals, democratizing wealth management. A real-life example of a company using AI is BlackRock, one of the world's largest investment management firms. BlackRock leverages AI and machine learning algorithms to analyze market data, identify investment opportunities, and manage portfolios more effectively. By harnessing the power of AI, BlackRock has improved investment performance, minimized risks, and enhanced client satisfaction. While AI offers significant benefits, there are also drawbacks and risks that need to be addressed. Regulatory and ethical concerns. The rapid use of AI in finance raises regulatory and ethical concerns. Ensuring compliance with existing regulations and maintaining transparency in algorithmic decision-making are critical challenges. Regulators are working to establish guidelines and frameworks to address these concerns and ensure responsible AI usage in the finance industry. But AI capabilities and how it's being applied is moving rapidly and changing constantly. Over-reliance on AI and potential bias. Over-reliance on AI algorithms without human oversight can lead to unintended consequences. Biases embedded in the algorithms or faulty data can result in inaccurate predictions or biased decision-making. Careful monitoring, validation, and regular updating of AI models are essential to mitigate these risks. Job displacement and the human touch. The integration of AI in finance has raised concerns about job displacement. While AI can automate many routine tasks, human expertise and judgment remain crucial. It is essential to find a balance between AI automation and human involvement to maintain a personalized and empathetic approach to wealth management. Cybersecurity risks. As AI technologies become more prevalent in finance, the risk of cyber attacks and data breaches increases. Protecting sensitive financial data and ensuring robust cybersecurity measures are in place are vital considerations for the industry. Evolving trends and advancements in AI technologies in finance are continuously and rapidly evolving. Advancements in natural language processing, predictive analytics, and reinforcement learning are opening new possibilities for sentiment analysis, automated customer service, and even the development of autonomous trading systems. AI can play a crucial role in regulatory compliance by automating compliance checks, detecting fraudulent activities, and ensuring adherence to regulatory requirements. Additionally, AI-powered risk assessment models can help investment managers identify and manage risks more effectively. Future challenges and opportunities. As AI continues to advance, challenges related to data privacy, interpretability of AI models, and ethical considerations will need to be addressed. However, AI also presents tremendous opportunities for financial institutions to offer innovative and personalized services, improve efficiency, and expand accessibility to a broader client base. Looking ahead, the future of AI in finance and wealth management is promising. The integration of AI technologies will enable more accurate predictions, sophisticated risk management, and enhanced customer experiences. Additionally, the development of explainable AI models and increased regulatory frameworks will help address concerns related to transparency, accountability, and ethical use of AI in the industry. To get free shares, see the referral link with trading 212 is in the description.